Hey folks, welcome to InTheMoneyStocks.com's technical intraday analysis video brought to you by the creators of Proprietary Price, Pattern, and Time methodology. Learn the PPT methodology and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get right into it today. The markets are trading higher across the board. We have the Dow Jones Industrial Average up 117 points. S&P's up about 6. The NASDAQ, on the other hand, is actually a little bit weaker on the back of Apple. Apple getting crushed today, down about $26. Take a look at Apple intraday right now, and you can see, again, it's taken quite a drop across the day today. We bottomed out right around the 11 o'clock time frame before a big bounce. Now you've come down, almost retraced to a double bottom, getting a small bounce now. But bottom line is, you just have to be aware that Apple was telling you over the last couple days it was ready to come back down. And just to go over the basics of it, I mean, let's just look at it logically. You had a beautiful bottoming tail going back to, mid-ish November. Right around November 18th, 19th, somewhere in that vicinity. And then off of that, it told you it was going to go up, right? Anytime you see a bottoming tail with such big volume like we saw today, it tells you you're going to head higher. So the low of the bottoming tail was just around the $500 level. So all of a sudden we saw a move up in the markets. The markets on Apple continued to drive higher, and we saw a move on Apple from basically $500 to just under $600. So again, you're basically making a huge $100, just under $100 gain on Apple. In this case, that's approximately just under 20% return to the upside. As Apple comes into the 200 here, you can clearly see the 50 moving average sloping down. All right, that slope down is telling you that there's a lot of resistance not only at the 200 here, but the 50 is coming into that same price. It's going to basically be a huge wall. I mean, like the Great Wall of China right there, keeping Apple from making a move. And sure enough, Apple tried multiple times to pop up and tag that 200. You can see it here, you can see it here, and you can see it here popping up, and every time it does, it failed. And I think a couple days ago, if we go back to Monday, this failure where we closed at the lows of the day, that was a very good signal something was wrong. Sure enough, what did we see? Yesterday, a gap down and a sell-off. Today, a massive sell-off, trading this stock down to $545.5. Now, the question is, well, where is this going to go? I actually do think there's more downside. The key levels of support are right here. You have gap window at the 540 level and gap fill right here at the 527 to 528 level. All right, so those are your two key levels to watch. I think both you get a bounce off of, but if you get the lower gap fill here, that's going to be your longer swing trade, near-term swing trade holding play. This one will be more a short-term quick bounce as opposed to this one down here. Overall, do I think Apple could go down below the lows of the bottoming tail? It is a possibility, absolutely. I mean, there is an absolute chance it could do that. But to do that, it's only about a 10% chance in the next month or so that it does that. And to do that, you would have to see the fiscal cliff. U.S. would have to go over that fiscal cliff. All right, having talked a little bit about Apple, which is kind of the reason why the NASDAQ is underperforming today, we also see Google down, Baidu down. A couple of the big tech names are down today. But if we go back to the spiders on an intraday basis, let's flip back to that intraday 10-minute. And again, remember, the spiders mirror the S&P 500. This morning, we continued the sell-off. And again, this is something you have to pay attention to. If you go back to Monday's action, you had a gap up and a reversal. So the markets gapped up and reversed all the way back down. Now, that told us whenever you have a big gap up and we've rallied a significant amount, and then you have a reversal where you close near the lows of the day, it tells you that there should be more downside coming. And sure enough, that led us into Tuesday, which did have more downside, and then Wednesday morning we had good downside as well. Notice, though, what happened here on Wednesday on the downside. All right, if we look at this area right here, you can see this choppy area right here on the spiders and this little pivot area. That's telling you that, and you could even make a case that this little pivot high is right there too. There's a lot of support in this area on the markets, and the markets in the short term were flushing out. And this is as Apple was falling as well. So what we saw is all of a sudden, we saw the level of support getting hit. That's not enough to buy. All right, that wouldn't trigger a buying opportunity just because you're hitting this level when the market's flushing. But what we did see following that was a bottoming tail. And again, you can see a long tail with a close in the upper portions. That is a bottoming tail. That's bottoming tails 101. I mean, the basic bottoming tail signal right there. Whenever you see a bottoming tail, it's a reversal signal. All right. The beauty of this is it gave my members a 50% retrace, which is part of the methodology. You look for a 50% retrace on those and buy. So you buy right here at the lows of the next candle. Instead of paying up here at the technical level where the bottoming tail is formed, you actually wait for the 50% retrace. You get it right there at the low of this candle at the 50% retrace, and then look at the rip up. All right, so the market absolutely ripped up there. The interesting thing, what we saw here now, is that the market reversed today on Obama, President Obama's comments. I was listening to them myself, and it was the first time I have heard him be somewhat dovish towards the Republicans in regards to making some sort of deal. Now, obviously, he wants revenues increased via taxes and so forth, but I did get the sense he was saying, hey, listen, we know we have to cut a lot more, and at the same time, you guys have to work with me to raise, at least in some way, revenue. You know, through loopholes closing, maybe raising the level that the rates get raised at. For instance, instead of 250, 500. It gave me a sense that he was there and actually, for the first time, not talking hardball and just being, you know, a defensive player there. But for the first time, he was actually reaching out. And I think that was very significant, folks. And the market's read it as such, too. As soon as I heard that, the market, again, just ripped up here. Great surge. We came right into some resistance levels here. You can see this area right here and this area, so right between these two levels. Market stalls, pulls back to the 200, stalls, pull back to the 200. Now we're back to this same level. If we get through the 20, we could actually come back down to the 50. But right now, again, you have to think that the market is in better shape than it was yesterday or this morning based on those comments. Now, there are some negatives out there. I mean, we do have some negatives. Obviously, Apple's a negative. I mean, there's growth issues out there in the U.S. I mean, we had the ADP private sector numbers, which were not spectacular by any stretch today as well. So a lot of that stuff is a worry, but obviously the fiscal cliff takes the cake here. All right, let's take a look at a couple other charts out there, see what else is moving. Chevron is having a nice bounce day today, up $1.36. And again, you can see same time as the market ripped up, Chevron ripped up. Okay, that stock, again, is going to have resistance. Let's just talk resistance lines. Resistance 1, resistance 2, and resistance 3. So resistance 1 on the upside would be at the 106 Pierce. Then you have resistance 2 at 106.35 and resistance 3 at 106.70. Downside support, if this thing continues to fall and pull off its highs here, you're going to look at the 200 as being a little bit of support here. That actually should be a bounce area for a quick scalp bounce intraday. And then the big one is going to be this pivot high here plus the 50 MA. Somewhere in this vicinity right here, if we flush down there, you would get a spectacular bouncing opportunity. All right. We'll go over a couple more stocks here. One of them that I traded this morning. And by the way, folks, just to reiterate, we use the proprietary price pattern and time PPT methodology here. It is proprietary in terms that we created it. It works, 80 to 90% success rate. It is amazing. All right, literally spitting out gains left and right. That's what we do here. We teach our members inside the research center. Not only are we teaching them, but we're giving them trade alerts, swing trade alerts with entries, exits, everything they need to know to make the same trades that we are making as chief market strategists. They're time-stamped with live, obviously being as soon as we put it out, it's time-stamped. You guys know when it goes out and so forth. So, I mean, all these are great avenues for you to begin to make this 80 to 90% success rate part of your general synopsis of how you trade. All right, not only that, but it's proven that we beat the institutions. I mean, have you looked at what the hedge funds are doing right now? Hedge funds are down on the year like 10% on average, if not more. I mean, here, just in the last 6 weeks, I think we've had 8 to 10 winners, 1 loser, and 1 flat trade. I mean, think about that. That's like 80+%, 90% success rate. Crazy stuff. In any case, guys, Freeport McMoran I traded this morning as it flushed through the 32 level, which was, again, coming into a key level. The stock was bought. We bought it in the chat room. I made a nice chunk of change on it. Not only that, but members literally took $1 plus on profits on this bounce. I mean, it basically went from a Pierce of 32. Let's say the average investor here or trader in the chat room got 31.85. We'll call it that. Not even at the lows. Just that's 15 cents almost above the lows. Either way, the stock goes above 33, from 31.85 to over 33. Tremendous profits everywhere. I mean, this is what I love. As investors and as swing traders and as day traders, I just like volatility. Give me volatility in the market. Give me movement, and we can analyze the market based on price, pattern, and time methodology, which again is called PPT methodology, and it gives us that 80-90% success rate, which we again hold true to based on track record, etc., and then just continue to follow through with it and just make money. So what I'm saying right now is there's a 7-day free trial. Make use of it, folks. It's there for you. Make use of it. Discover what all the players here at In the Money Stocks are discovering. Discover how to beat the institutions at their own game and make more money than them any day of the week. It is right here. InTheMoneyStocks.com, 7-day free trial to the Research Center. Research Center is geared towards swing traders and investors. Intraday Stock Chat is geared towards day traders. Take care, guys.